Welcome, my name is Vishal Tekshanlani. Today I'm speaking to the CEO of Santos, Kevin Gallagher, and we're going to discuss the company's growth strategy following its 2018 half-year results. Kevin, it's great to have you in the office again. How are you?
Great to be here, thanks.
That's great, Kevin. Now, before I launch into my first question, I want to share some interesting factoids with you about how nabtrade customers are approaching investing in Santos. Yep. So obviously, the Santos share price has recovered quite substantially, more than doubled since the low point in the middle of 2017. Yep. But since that time, we have seen a decrease in the number of investors with open positions in the company. Now, typically, your current investors tend to have a 5% weighting in Santos's shares, but what we've seen over the last year is that they're tending to take profits or cover their losses, if you will, as the share prices are recovering. So with that data against a backdrop, and in light of your recent results as well, what would you say is the Santos value proposition in terms of, the long-term value that Santos has?
Okay, yeah, I think over the last 2 years, what we've really been pushing as our strategy at Santos is the implementation of a very disciplined operating model that focuses on 5 long-life natural gas assets. And that disciplined operating model is focused on cash generation from those assets. And it has to be disciplined so that we can ensure that we provide strong cash flows from those long-life natural gas assets throughout the oil price cycle. And like all commodity cycles, they go up and they go down. And so for us, the focus is implementing this disciplined operating model, generating strong cash flows through the cycles so we can return to strong, sustainable dividends based on those cash flows. And the good thing you can see from our half-year results this year is you're starting to see the results of that strategy coming out now, with a doubling of our underlying profit, extremely strong cash flows in the first half of the year, and of course delighted to announce at the half-year results the return to a sustainable dividend.
Okay, and so an important aspect of that results was the Quadrant acquisition. Now, if we take a step back, 5 months ago, Santos was really a company that was recovering and emerging from that oil price downturn, and your focus was balance sheet strength, operational efficiency, cost discipline, so that, as you mentioned, you could survive that sub $40 per year oil price environment. And now you've moved into the growth phase. Can you talk about the benefits of this takeover and I guess the shift up in confidence that you have?
Well, as I said previously, the focus has been on implementing a very disciplined operating model around 5 long-life core assets. And as part of that, we have really focused an organisation on driving down our free cash flow break-even across all of those assets. At the half-year results this year, we're delighted to announce that our free cash flow break-even for the business is now $35 US. And to put that in context, back in 2016, it was $48 US. So that's an additional $13 per barrel of oil equivalent margin we're creating out of the business. So I put that in the context of the Quadrant acquisition. Quadrant further reduces our free cash flow break-even down to as low as $32 per barrel of oil equivalent, which of course strengthens our cash flow generation even through the low points of the cycle. So these assets give us a lower free cash flow break-even, and in addition to that, they provide very significant growth opportunities and exploration running room in our Western Australian long-life assets.
Okay, so a lot was said in the last few months about Santos's rejection of the Harbour takeover offer. So given you've walked away from that deal, can you talk to investors about why Santos is better off alone, and what does that mean in terms of your future M&A prospects?
Well, I guess first of all, I'd repeat that we rolled out a transform, build and grow strategy in December 2016. And everything we've done since then has been consistent with that strategy, even the recent acquisition of Quadrant Energy. As part of that communication to the market, we also communicated a debt reduction target, where we targeted strengthening the balance sheet by reducing our net debt by $1.5 billion US by the end of 2019. Now, we've achieved that more than a year early, so we now have a balance sheet that has put us in a position to execute some of the growth activities across our portfolio, including the acquisition of Quadrant, at a much earlier point than we would have originally anticipated.
And so does that mean you'll be hunting for more targets?
No, look, I think the way I would try and contextualise it is that around the 5 core long life assets in PNG, GLNG in Queensland, Darwin LNG in Northern Australia, Western Australia, and of course our Cooper Basin assets, we will continue to look for organic and inorganic growth opportunities around those hubs. And it's important, I think, for investors to remember that our strategy is an upstream brownfield strategy designed to grow upstream opportunities around the existing infrastructure positions we have on these 5 core assets, where that huge capital investment has already occurred. And so with them being brownfield upstream projects, historically, these are the types of projects that deliver much higher rates of return over their life cycles.
Okay, and now Santos, of course, in welcome news for shareholders, has reinstated its dividend.
Yep.
Can you just clarify for shareholders what the policy is around payouts? Is it linked to profitability, cash flow?
Well, look, when we announced on the 28th of June a new dividend policy, and that policy is based on a payout ratio of free cash flow generated, which is consistent with our free cash flow disciplined operating model. And so the priority will be to pay that dividend throughout the cycle. We said we would not bring the dividend back until we were in a position where we were confident it would be sustained, a sustainable dividend. And the board has elected to do that. And really, as a CEO who recommended stopping the dividend in 2016 in order to repair the balance sheet, it's very important to me, and I'm very pleased that we've been able to bring that dividend back. But the priority would be pay that throughout the cycle, even in the low points of the cycle. We've now got a business model that's designed to do that. Cash over and above would be required to pay that sustainable dividend. We would be looking to reinvest in the growth opportunities that I've talked about in PNG, Northern Australia, Western Australia, and of course our other onshore assets. And if there's a free cash flow generated above that, then we would look to return that to our shareholders as special dividends. And that's a really important part of our value proposition for our shareholders.
Okay. And lastly, Kevin, of course, you've emphasised that Santos's mission is to be among the lowest cost producers. But in terms of where you see the oil and LNG prices go, because every increase is effectively more cash flow for you, right? Where do you see the outlook for the next, say, 3 to 5 years?
Well, Vishal, that's a really important point. I mean, by running our business as though the oil price was always $40, we are positioning our business to take advantage of any upswing in oil prices. In terms of LNG, we're very confident in our product. We have 30 to 40 years of demand growth, particularly across Asia for gas, really driven by their need to reduce emissions and improve the quality of air across Asia. We're seeing 50% year-on-year increases in demand for LNG from China, and we see that continuing for many years to come. So very strong demand, great product, lots of it, and if we can be consistent and disciplined in our operations and maintain our cost discipline, then I think there'll be many years of strong returns for our shareholders.
Okay, Kevin, thank you so much for coming in to speak to me and sharing insights with our community of Santos shareholders on nabtrade. Really appreciate it.
Thank you. Thanks very much.
No problem. I hope you found this information valuable. Now, please remember what we talked about isn't a recommendation to transact in Santos's shares. If that's something you wish to do, it's really important that you do your research and please consider seeking financial advice. My name is Vishal Tekshilani, and I'll see you next time.